action reaction. The only commentary I would have is for all of the firms that are choosing not to go down the path of private equity or ESOPs or combining with a wealth management firm, what is coming out of that, however, is the revaluation of the accounting firms.
Yeah.
The reality is most of us thought they weren't worth anything. And now a third party has come in and said it's worth two, three, four times what the current partnership agreement calls for. Clearly, very, very interesting board meetings going on, talking about, do we keep the value of the business the same? Do we sort of meet in the middle of where a third party says, because we're conservative,
Yeah.
we don't want to ever overvalue? And you can imagine when you put different partners in the room of different risk tolerance and age and mindset, you get some live.
Welcome to AFO Wealth Management Forward, a podcast powered by Arrowroot Family Office that's at the intersection of accounting, wealth management, behavioral finance, technology, and entrepreneurship. We help accounting firms and financial advisors grow their practice by going beyond the numbers as we learn from industry leaders and subject matter experts to discover the secret to their success. A podcast that highlights everything from the transformative power of AI to embracing the human-first approach of behavioral finance to help you understand the psychological and emotional relationships to money and meaning. Here is your host, Rory Henry, director at Arrowroot Family Office and author of Holistic Guide to Wealth Management.
Hello, everyone. I have another phenomenal guest joining me today. He is continually topping the list of Accounting Today's top 100 most influential. He's also recognized as a top 25 thought leader by CPA Practice Advisor. He's the CEO of Koltin Consulting Group. He's part of many of the top transactions in the accounting profession in M&A. He's also a keynote speaker on leadership. I loved his talks on leadership that I've seen. Absolutely thrilled to have him join me today. So without further ado, let me introduce our guest, Allan Koltin. Allan, welcome to the show.
Rory, thank you for having me. This is the highlight of the day, the month, maybe 2024. Yeah.
Oh my gosh, this is
I've
definitely the
had
highlight
this
of
on
my life.
bucket list.
It's on my bucket list, Allan. We got to go. My next bucket list would be to go see a Cubs game or a Bulls game or a Brewers game with you. I'm a big sports fan. As a UCLA Bruin, I'm excited to be in the Big Ten. I'm going to be coming to Big Ten country here, Allan.
Fantastic. Well, we're liking the Pac-12. You know, I'm a diehard Wisconsin Badger fan. Matter of fact, I'm going to Camp Randall on Saturday with the kids to
Nice.
watch us get blown out by the Oregon Ducks, the number one team in the country.
They are a force to be reckoned with. But
To
yeah,
tell you how unconfident I am, I've booked the game starts at 6:30. I
yeah.
booked an 8:15 reservation at the Top Steakhouse in Madison because we're going to leave at halftime.
At least you'll get a good steak out of it, right?
There you go.
Yeah, I love it. I love it. All right. So I got so many things I want to touch on here within the profession. But you know what? I really loved your talk when you talked about for the last 32 or 34 years now, the profession had two services, right? And now we've seen with cloud technology and firms transforming, there's so many services that are now being offered. And I know I talk about in the book, the brave new world that we're now in with the inflection points of private equity and the pandemic is really transforming the way firms do business. So maybe I ask you to start out here and put on your, accounting history professor hat and kind of give our audience, a background of what you've seen and kind of currently where we're at with the profession.
Well, good question, Rory, and way to kick it off. The math is 137 years. 1887, 27 accountants got together, and I'm told that's how the AICPA even started. But I would tell you for the first 133, which gets you all the way to 2020.
Yeah.
For me, I got in the profession in 1980, before you were born. And for 40 years, it was a steady Eddie. There was no change. Change was, I don't know, the recession of 1980, 1990, the internet in the 90s, the Y2K, the demise of Anderson, the 2008 recession, the 86 Tax Reform Act. We were in a protective bubble. And whether times were good or times were bad, it didn't matter. We offer what we call type one services, services that clients don't want, but they desperately need:
Yeah.
financial statements and tax returns. And, as they say in Broadway, the show goes on no matter what the economic conditions are. And I believe 2020 was the perfect
Yeah.
storm. You couldn't make up what was about to hit. As we always say, the fourth industrial revolution hit us right between the eyes.
Yeah. And accountants went from being, maybe an afterthought to the most attractive person in the room. And this is where private equity came into play here. And I know Eisner Amper and Tower Brook was that first deal. Maybe have you touch on, what you're seeing. I mean, the early returns here from those investments, how are they looking? And then, I know we talked about it just before we pressed record here, that, out of the top 400 firms, you're probably only going to see 30%, maybe you said, that are going to take PE money. There's going to be all these other ones that don't. So let's kind of dive into what can occur there.
So yeah, great comment. And we should talk about call it the other 67%. Uh, and and the range is beyond imagination. You will have some firms that have found other ways to capitalize their firms. And,
Yeah.
Months ago I was giving names out freely, but some of those names that maybe weren't thinking private equity today may in fact be thinking it. So I won't give names so much, but what I have seen is firms that aren't ever going to do a private equity deal, and they're going to remain as some of the most successful firms in America. And you say, well, how could that be?
Wow. Yeah.
There's such a thirst, a need for capital, for technology and transformation and talent. And, we're seeing different strategies. We're seeing the capital requirement of an equity partner going up at some firms.
Mm.
In the old days, if you made $1 million, you probably gave 30% of that as capital that was held to run the business. I'm seeing firms today charging the equivalent of 1 times the compensation that someone's earning. So that's almost like a 300% increase in capital coming in. I'm seeing some firms reduce the retirement benefits or deferred comp on the backside. I'm seeing some firms, not many, but some going and taking on debt, uh, maybe working with private equity, but more so like private capital, and doing not a majority sale, but a minority sale.
Yeah.
So it's coming in all shapes and sizes. The important lever is seeing the changes, seeing the need to transform the business, asking the question, how will we get the capital, and then going out and doing it. The sad commentary is probably half the accounting profession, as we've talked about, is coming off back to back to back great years from a profit standpoint. So we're living a little bit in a mirage.
Yeah. It's a little
Why would
inflated, right?
why would we do anything different? We just had back to back to back the three best earning years we've ever had. And I think, as you know, Rory, nothing in business is forever.
No.
And I think the history books will write a chapter someday, and what they'll say is maybe the worst position you can be in business is to be in a position of power, strength, and have the belief that it will go on forever.
Yeah.
Nothing in business is forever.
No. Well, what do you see coming down the road then if we've had these record earnings years? I know a lot of this stuff, a lot of that was the PPP money and the free money that was coming from the government, allowed these firms to really grow, but that's didn't last. It's not going to last forever. It didn't last. So what are you seeing here on the horizon, let's say for the next couple of years, Allan?
Yeah, we had lots and lots of low-hanging fruit.
Yeah.
Rory, if I ever get to write a book like the great one you just put together, I would talk about 2020 to 2024 as the golden age of
Golden
public
age.
accounting. If you couldn't grow the business, if you couldn't make money, you ought to think about a different occupation. I mean, you talked about PPP money. We became experts in how to qualify for a PPP loan, and then loan forgiveness. We had the employment tax credits, which were substantial fees.
Yeah.
We had reductions in real estate and space. Lots of budgets said we're going to only project we need 30% of the real estate we used to have. It's the second biggest line item on the income statement after payroll, right? You had alternative ways to get work done, sending it to some other country and getting it done at $25 an hour versus 125 here. You had the creation of AI and bots starting to happen and taking the proverbial 200 people hours and getting it done with a flip of a switch. The ability to raise rates. There's been more rate setting in the last 5 years, aggressive rate increases than the last 40.
Yeah.
It finally happened. And what caused it to happen was a capacity issue.
Yeah.
We had more work than we could handle. And how many accounting firms out there went to the tax practice, to the individual 1040 practice and doubled the rates?
Yeah.
And what happened? Half the clients left, but half of them stayed.
Stayed. Yeah.
Same revenue, half the work. So all these catch-up journal entries, getting rid of crappy clients, raising their rates, or just getting rid of them, spending more time with our A clients. All these kinds of things have been going on. And I look to the next 5 years, and I don't want to be a downer, especially on your podcast. You'll never invite me back. But I think the next 5 years is going to be hard. And I think what we're going to have is separation. Separation where I think for many, many years, all the accounting firms sort of did the same.
Yeah.
I think we're going to have some big winners. Size doesn't matter, but I hate to say it, but I think we're going to have some big losers. Some firms that just were blinded by their success, almost like it was a mirage,
Yeah.
will go on forever.
Yeah. I am a big advocate for not only EQ, emotional intelligence, but the AQ, the adaptability quotient, right? And being able to adapt. And I talk about this in the book, really integrating the CPA profession with all wealth advisory profession. I think we are on a collision course to really provide truly holistic advice, Allan, because one decision really affects another. And I've long argued that the accountant, the CPA, is the financial first responder. They're the ones that are working with those clients early on in that financial life cycle, starting that first business, helping them grow that business. And they are the ones guiding these small and medium-sized business owners, which are the backbone of our economy. So I believe moving forward, we need to really look at the person, the human, and help them not only grow their business, but also help them have a vision for their long-term finances, right? Make sure that they have an exit plan in place, but also an estate plan, making sure that their family's taken care of in case of any unforeseen circumstances. So I'd love to get your commentary on that, because I know this has been tried, in the past here, but I do believe we are seeing the integration of these worlds. I know you worked on a deal with Peter Luke at Creative Planning. So maybe get your commentary on, the integration of the wealth and CPA professions.
Before I do that, I got a bone to pick with you. You got me in a lot of trouble.
Oh, no.
So you sent me a copy of the book. The book is outstanding. I don't think I've read a book from front to back cover since I read a book in sixth grade. In fact, I went back a couple months ago to finish it. I was intrigued. I never figured out how it ended. So I took your book with me, and I said to my wife, Sharon, we went to Portugal for our 30th wedding anniversary.
Yeah.
And it was a hard no in terms of any work.
Yeah.
And I started reading the book and I couldn't put it down.
Oh,
I mean, I
exactly.
felt like it was like a look into the future as to what's going to be important, what's going to change, what's going to stay the same. So look, if any of you are listening in and you haven't read the book yet, go ahead and do it. When you finish, send the book back to Rory and he'll autograph it for you.
Yes.
It's priceless. It really is. So your question about creative planning, right? Peter Malou. I mean, you can't make this stuff up. The first time we met, and I think you've heard the story, it's funny. He calls me on my cell phone. I play in the accounting world. I don't know creative planning. I would come to realize, amazingly, that I was a customer of creative planning and didn't even know it. They had acquired a firm called Iron Financial that did some of our work, and lo and behold, at the bottom of the statement, it says creative planning. But I thought when Peter reached out with his opening comment, are you Koltin? And I said yes. And he said, can you go find me $1 billion accounting firm who wouldn't think that's a prank call?
Yeah.
So I saw the 816 area code. I know that's Kansas City because I've got
Yeah.
family there and cousins
Yeah.
who love to prank me all the time. We got a couple minutes into it, and I really wanted to get back to the work I was doing in the backyard. And I said, "Do you mind just, I missed your name and the name of your company. Would you mind just spelling it for me?"
Yeah.
I was
Yeah.
sort of messing around. And what does Peter say? He says, "Okay, it's creative. You should be good on that one. But planning," he said something like it's got three N's in it or something like that. And he starts spelling it. And he says, "You have no idea who I am, do you?" And all of a sudden I go, "Oh my God, I'm so embarrassed. I thought you were my cousin." Who calls up and asks, especially a wealth management firm, to
Right.
go buy an accounting firm? We call that slumming it. Accounting firms, we want to go buy wealth management because they print money.
Yeah.
Who would dare go the other way? And you know what? He reminded me of Sam Walton from
Yeah.
Walmart, the legendary leader. What did Sam used to do? He'd get in the rowboat, he'd get in the river, he'd go down the river, and he'd look where the competition was, and he'd row the other way.
Yeah.
Peter was willing to defy gravity and go where others hadn't. And, we're all a part of our humble beginnings. Here's what he said to me. He said he was once a estate planner in Kansas City. That sounded like a sole practitioner.
Yeah.
And he watched wealth advisors come and go. And he said, when the market goes up, you're a rock star. But you know what? If you don't have stickiness, when the market goes down, they leave you. And he said there's about 25 wealth preservation, wealth enhancement, tax planning, charitable giving, all these kinds of, I think he used the word prongs.
Hmm.
The more prongs you can put in to the client, the less apt they are to leave you when the market goes up or down. We call that stickiness, right?
Yeah. Yeah.
He said the problem is you can go to one of the top 10 firms and go get a tax planning expert, but when you're doing over 250 billion of AUM, how do you dent that? You need an army, you need a village.
Yeah.
So his thing was to go buy a big accounting firm, preferably one that was heavy in tax and also had connectivity to wealth management. And I remember saying to him, like, "Hey, these firms do things like client accounting services,
Yeah.
fraud, forensics, cyber, audits, all these kinds of things. How do you feel about it?" And he said, "You know what? If they're good businesses and we can grow them, why not?"
Yeah.
Talk about thinking out of the proverbial box.
Yeah. And it goes back to the transformation part here, because I think we're in a privileged position, Alan. And I argue that, we are the trust profession, but as our friend Ron Baker likes to say, we're really in the transformation business. We're transforming businesses. We're helping people transform their personal lives. And they share the intimate knowledge of their business and their personal finances with us as advisors. So we were able to go in there and hopefully help them make the necessary adjustments to grow their business or grow their personal wealth. So I always say that we're not just only in the trusted business, we're really in that transformation business.
Yeah, I was, what is today? Tuesday. I was in Las Vegas yesterday speaking at the National Life Conference, formerly known as National Life of Vermont. They
Mhm.
do something called a CPA symposium. And I finally was able to come up with what I wanted to say about the business we're in. The business we're in, when you talk to the most successful firms, partners, leaders in America, you know what they do? They don't do financial statements and tax returns. They're in the business of helping their clients with their business and financial problems,
Yeah.
whatever they may be.
Yeah.
And in order to do that, you can have some of the existing products, but you've got to have a way to build out the value add products as in the consulting and advisory and outsourcing space. And you know what? If you can't acquire it or grow it from within, you've got to have that window to partner
Partner.
strategically with third parties that are resident experts.
Yeah.
And so if you want to get into wealth management or the sale of life insurance or cost seg or R&D or
Yeah.
whatever it might be, nothing wrong with not being the resident expert, but rather being the quarterback for your client, helping them to solve any problem. And
You did read the book, Alan.
yep. And I'll always give you credit for that, but it's sort of an awakening. You use the
Yeah.
word transformation. I call it an awakening
Yeah.
of why we exist. to serve our clients.
Yeah. And I say throughout the book, you read that, and I talk about on the podcast, we shouldn't be a servant to a service. We really service that relationship. That's why I trademarked Advisor. It's a return on relationship. The ROI will follow if you cultivate that relationship. You care for that person. You understand what that business looks like, what that business needs, what that person needs, what that family needs. If you really focus on that, the ROI will take care of itself.
Yeah. You know, you talked about this in the book, and I don't know if it got specific to the wording, but us accountants out there, it's funny. Every decade or two, we come up with some mantra that sort of
Yeah.
wins the day. I remember in the 80s and 90s when we would go in the 80s, we'd talk about peer review was brand new. And if you had a peer review, you could go into a potential client and say, we're different than everybody because we're a quality firm.
Yeah.
And, you know, for that week or month, if you were the only one that had gotten a successful peer review, you had something to differentiate yourself.
Yeah.
In the 90s, we camped onto that. We said, we're in the business of holding your hands. And I
Yeah.
always noticed with the prospect, they would take their hands and put them, down on the table. I guess they didn't want to do that. And then we coined, as we got into 2000 and greater, we talked about being the trusted advisor. And
Yeah.
all the survey information supported it. But that's what we hung our hat on until clients said, that's overrated because if I don't trust you, I don't use you.
Right.
That's just a given. And I think today, where we finally have migrated today, it's not the most trusted advisor, it's the most valuable advisor. I don't make any personal or business decision of significance without talking to you first.
Yeah.
And, when you own that relationship,
Yeah.
you can bill for value, you can get the kind of rates you want to get. And
Yeah.
when the next firm calls up to steal the work, client's not moving.
Not moving.
Yeah.
And that's when people feel heard, understood. That's where I go back to a human first approach in doing the deep discovery, Allan. And I talk about in the book and throughout my speaking, the consultative approach, I believe, is just so much more effective as opposed to the expertise approach. I think the professions have historically, both the accounting and wealth advisory, hung their hat on being the expert in the room. I want to, share my knowledge. I want to save you from a problem. But it's really diving deeper and asking great questions on what does Allan really want out of his business, or what does Allan really want out of his life? What matters most to him? What are his values? I think when we take that approach and we do that deep discovery, we can have great outcomes for a client and be that most valued advisor.
Rory, I'm laughing right now because the first time we talked like this, the first time we met, you reversed it on me. You pulled an Allan. You spent your time asking questions about me,
Yeah.
about my business, about my personal life, about my personal and business goals. And what you really did is you put together an action plan of how I'm going to build a relationship of trust and respect with Allan. So
Yeah.
when you talk about asking good questions and asking, and listening, that's something we never get taught how to do.
Yeah.
And I find that the best of the best in accounting firms and wealth management firms, exceptional listeners, comfortable in their own skin. They don't have to impress anybody, but damn, they're going to take the time to get to know the person on the other side of the lens and find out what makes them tick. So talk
Yeah.
about that a little. Has that just been an inherent part of you, or is that something later in life, like the light
That's a
bulb
great,
moment?
Allan. You've turned the tables now on me. Now you're becoming
Hey.
the host of the podcast. I love
Hey,
it. I
we're
love it.
live from Koltin
Ah.
Consulting Group. We've got Rory Henry on the call today.
Oh my gosh, I asked so many questions. I don't necessarily share a lot on my own podcast. Folks have heard me talk about this, Allan. A big moment in my life is when I took an improv class almost a decade ago. And I had a fear of public speaking, and I wanted to get over that fear. And the best way to do that was to go on stage and not have a script and try to perform from just having a suggestion and working with a team of performers. And so I got over my fear of failing. So that one was a huge breakthrough for me. But more importantly, what it allowed me to do, Alan, it allowed me to stay present and actively listen, to really build off the last thing that was said. And it helped me out not only in business and the advisory work that I do, but also just in life, and trying to really stay present and not have to think about try to be funny or think about an idea in my head, but really stay present. And it helped me in podcasting as well, to be able to ask those questions and build off of what my guest is saying, and hopefully provide something to our audience that's of value. So I think really that the training I did in improv comedy really became a foundation for me to not only build the practice here, but also the podcast, the thought leadership, and the writing, and the wonderful relationships that have come about from it.
So you realize 99.999% of accountants out there, if you put them up on a stage and like improv and like see how funny they could be or what they do, we would die.
Yeah. Well, I did
you
die.
had some special things, I think, going for you that us mere mortals, I doubt really have.
Oh, I don't know, Alan. I think I'm no different than most folks out there. Like, yeah, tax business. I'm a numbers person. Um, I think just
Rory,
taking
can you
leaps.
can you name the world's most funniest accountant? Let me help you out. You
Go
can't,
ahead.
because there isn't one.
I was going, ooh, I just saw, I know you're a big baseball fan, but Freddie Freeman, World Series MVP, his father and uncle have a CPA firm called Freeman and Freeman. They asked him, if you weren't going to become a baseball player, what were you going to become? He's like, I was going to become a CPA, Alan.
Oh my God, that's insane. That's
He
insane.
went to my high school,
Wow,
Freddie Freeman, Albadena High School in the city of
really?
Orange. Yeah, yeah. But he was going to become a CPA if he wasn't going to become a baseball player.
Oh my God. Oh my God. It's incredible.
Yeah.
Maybe the greatest World Series moment in the last decade for sure.
Right.
Right? The
Yeah.
walk-off grand slam.
It was
Yeah.
unbelievable.
Yeah.
Yeah. Well, this has been awesome, Alan. I know we're running
Okay.
up against time here. Is there anything that you want to talk about? Anything else you want to talk about, share with our audience that we didn't touch on?
It could be for another episode. I understand you invite guests back every 10 years. So, but action reaction. The only commentary I would have is for all of the firms that are choosing not to go down the path of private equity or ESOPs or combining with a wealth management firm, what is coming out of that, however, is the revaluation of the accounting firms.
Yeah.
The reality is most of us thought they weren't worth anything. And now a third party has come in and said it's worth two, three, four times what the current partnership agreement calls for. Clearly, very, very interesting board meetings going on, talking about, do we keep the value of the business the same? Do we sort of meet in the middle of where a third party says, because we're conservative,
Yeah.
we don't want to ever overvalue? And you can imagine when you put different partners in the room of different risk tolerance and age and mindset, you get some lively discussions. Yeah.
I mean, I would love to be a fly on the wall of some of those boardrooms, Alan. I'm assuming you just have stories upon stories.
Yeah, you're too young, but there used to be a TV show called The Art Linkletter Show. And the slogan was, you can't make this kind of crap up. And you can't make this up.
Yeah, you
Yeah, yeah.
can't make
We're
this up.
seeing all different kinds of Hollywood plays,
Yeah.
evolve. Yeah.
Well, I know you touched on, I think it was a Journal Accountancy, one of those articles where you say that, eventually we're going to see Apple or Microsoft, sovereign wealth funds, family offices, I know, have started to look at this. Are we seeing any movement there on that front that you could share with our audience, Alan?
Yeah, we are. They're
Yeah.
they're coming out of the woodwork. There are a couple family offices that have already bought accounting
Yeah.
firms. There are some enormous family office groups wanting to get into the business. Everybody's got capital and they're looking
Yeah.
for a place to get a great return. And as you alluded to early on, the early precincts, first couple of private equity deals have been, in the words of Freddie Freeman, grand slam home runs in the World Series.
Grand
Yeah,
slams.
they've been that great. So, pension funds,
Yeah.
everything you could imagine is coming in. So, yeah, we will have the day where a famous high net worth individual or a company like a Microsoft will be making an announcement. And for sure, we won't have to wait that long before we hear about public company IPOs
Yep.
coming to
I
market.
mean, that eventually somebody's got to buy these firms. Is that what obviously the logical step here is to have these IPOs?
Yeah, I think it's we have, I guess, one public one
Yeah.
today, right?
Yeah.
CBIZ. I
CBS.
think if we were back on this call in 5 years, we could have as many as 4, 5, 6, 7 public company owned accounting firms.
Wow.
Got the alternative practice structure in place. It actually makes it rather easy. You've got CBIZ as sort of the now uber successful launch.
Yeah.
I was at the CBIZ Markham partner celebration this past Sunday in Orlando, and was doing a fireside chat where I had the leaders from both groups on the stage. And CBIZ in the first 5 years when they went public, 1990, I'm sorry, when they entered the accounting profession, it was a disaster. I think we've all
Yeah.
forgot about it. The stock was 18 in 1998, and by 2000 it was 1 and almost got delisted.
Oh my gosh.
Yeah, I mean, you fast forward to today, and that stock price is closing at 78 or $79 a share. It's become, if I can say it in the accounting profession, a Wall Street wonder.
Yeah.
So, yeah, I think we're going to see more of that as well.
I love it. All right. Very optimistic look here at the future. Allan, thank you so much, buddy, for coming
Rory.
on the podcast. Thank you for contributing to the book. I really appreciate that if people want to reach out, obviously you're a huge name here, Allan, or they want to, if a family office is listening here and they want to, buy an accounting firm, what's the best way to reach out to you?
Real easy. Just you can hit Google or go to our website, Koltin, real easy, www.koltin.com, or go to LinkedIn or yeah, any of
Yeah.
those
I'll
ways.
send the information to Freddie Freeman. Maybe he wants to buy an accounting firm here when he's retired.
You know what? With his new contract, he can
Yeah.
afford one.
Right.
Absolutely.
All right. Thank you so
Thank you,
much, Allan.
Rory.
Appreciate it.
You too.
All opinions expressed by Rob Santos and Rory Henry on this website podcast interview are solely their opinions and do not reflect the opinions of Arrowroot Family Office LLC or their parent company or affiliates, and may have been previously disseminated on television, radio, internet, or another medium. You should not treat any opinion expressed by anyone as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their opinions. Past performance is not indicative of future results.